billion worth of a trade deal. Tariffs cut from 25% to 18%. A promise to buy American at a high level and an agreement to stop buying Russian oil. More than a year of trade tensions between the US and India and a key point of friction, Russian oil has been settled now. US President Donald Trump has announced that India agreed to stop buying Russian oil and buy more from the US. The question now is, what happens to India's imports of Russian oil? And even if India fulfills its promise of not buying Russian oil, how will it fulfill its oil basket now? Let's take a look. Russian oil has been cheaper to India because of the sanctions on it. Now that the promise of not buying Russian oil is on the table, it would change the rate difference for India. So if India switches to US oil, it would mean that India will have to pay world prices with higher freight costs and without the discounts that have been negotiated. This is expected to increase India's oil import bill by 5 to 10% per barrel, which ultimately translates to billions of dollars. For a better context, understand this. Russian oil per barrel costs around $50 to $55, at times even lower because of the sanctions. On the other hand, US oil per barrel costs around $62 to $65, along with additional costs for shipping and insurance. In terms of rupee, the gap difference will be of 600 rupees to 1200 rupees per barrel. Now, this simply translates to a cost of additional $7 to $12 more per barrel. If you factor in a year's difference, this could increase India's entire import bill by $9 to $12 billion, depending on how much oil is imported and how much the international prices fluctuate. In terms of Indian rupee, tens of thousands of crores of rupees every year, which affects fuel prices, inflation, and the subsidy given by the government. Now coming to the key question, what happens to India's oil imports from Russia? India had already begun diversifying its oil imports. US now accounts for nearly 10% of India's total oil imports. According to the European Centre for Research on Energy and Clean Air, India's Russian crude imports recorded a sharp 29% month-on-month reduction to the lowest volumes since the implementation of the price cap policy. In October last year, Indian refiners began to cut Russian crude oil orders about 38% from the previous year in October and then in December. According to a report by Reuters, Indian refiners will need a wind-down period to complete Russian oil deals before imports from that country can be halted, and they have so far not been ordered by the government to stop such imports, two refining sources said. Indian companies have already booked cargoes loading in February and arriving in March, so a wind-up period would be needed to fulfill existing commitments, their sources to Reuters said. One of the key highlights in the India-US trade deal is reduction of US tariffs on India. According to India's chief economic advisor, Dr. V. Anant Nageswaran, lower US tariffs could significantly lift India's growth outlook. He expects India's growth to move closer to the upper end after the US deal and sees a strong boost to capital inflows following tariff reductions. India-US bilateral trade in goods stands at about $131 billion, and India's investment in the US has hovered around $40 billion. In the latest deal announced, US President has said that India has committed to buy American at a much higher level, in addition to over $500 billion of US energy, technology, agricultural, coal, and many other products. How India fulfills the promise and how will this trade deal decide the future of the Indian economy? What is your opinion on this? Let us know in the comments section below.